Elections, massive events that shake up the world. And for traders, they bring both incredible opportunity and serious risk. So, should you jump in or play it safe? Elections are a goldmine for instability. Markets can swing wildly based on results, policies, and even speculation. This means huge opportunities for traders who know how to play the game. But here's the flip side. Volatility cuts both ways. If you're not careful, one wrong move could wipe out your gains, or worse. So, how do you decide? Is trading during elections a chance for massive profits or a recipe for disaster? Let's break it down. First, risk management is key. Set tight stop losses. Know your exit points. Don't get greedy, and never go into a trade without a plan. Second, history shows us that certain sectors soar during elections, while others tank. Look for sectors like defense, energy, and healthcare. They often move the most based on new policies. If you can spot these patterns, you'll be ahead of the game and in prime position to take advantage of market shifts. But remember, elections are unpredictable. Even the experts get it wrong. That's why you need to stay flexible and be prepared for any outcome. So, is it a massive opportunity or a risky move? It's both. But with the right strategy, you can turn that risk into reward. Want to learn how to trade smart during the chaos of elections? Subscribe for more insider tips and join our community at Sniper Trades, where we help traders navigate these big moments.